quickly, I wanted to chat with Clinton Wilkins about, we're talking with the Bank of Canada raising his interest rate, so we'd bring Clinton in quickly here to get his take on all of this. He's, of course, our mortgage guru. Clinton Wilkins, what does this mean for the average person out there, this hike?
The average consumer that is in a variable rate mortgage product is going to see their payment increase or their amortization increase, Todd, with today's announcement. Many lenders will increase today their prime rate by 50 basis points. Many lenders, their prime rate will now be 3.7%. There's some lenders who have a variable rate mortgage where the payment is fixed, but the amortization will now extend. So depending on which type of product you're in, that will obviously make a difference. Your previous caller mentioned that, the government is, not getting it right. And I think they've admitted that, Todd. And they made a very sharp comment today in today's announcement saying that they will increase the rate more if they need to get the inflation in line. Inflation is a little bit of a runaway train that they're trying to get under control, but many economists are projecting that we're going to be in a recession territory by the end of next year. So if you're a consumer and you're in a variable rate mortgage product, or if you have, a home equity line of credit or any other debts attached to a variable rate product, you're going to see a change in your payment. Don't stress out, because the fixed rates today are also very high. Many consumers may consider changing or converting into a fixed rate, and we're really discouraging consumers from doing that. Today, the same type of product in a 5-year fixed rate is anywhere between 4.5% and 5%. So really what that means, Todd, the variable rate is still a great option, and we are still at pre-pandemic pricing. Before the pandemic even struck, the prime rate was 3.95. So we're below that. And one other comment about housing. We have some of the most affordable housing from across this country. We've certainly seen some increases. I understand it's very challenging for first-time home buyers, but the average home price in Halifax is about $500,000, and it is some of the most affordable housing, in Atlantic Canada compared to the rest of the country. So, I think we've right-sized our prices. I do not believe with today's increase in the key overnight rate, it is going to negatively impact the house prices like we're currently seeing in Ontario and in BC. But I think we're going to restabilize the market here a little bit, Todd. There's certainly more listings out there. Yeah. And, I think that coming into the summer, it's going to be certainly an interesting time.
All right, so just generally, what are people looking at with this interest rate hike if you've got a variable mortgage in the $500,000 range? Just kind of ballpark, what's that translate into a monthly or biweekly payment?
Depending on your amortization, you're probably looking at around $100 or so, plus or minus increase in your cost of borrowing right now. So although that can be significant for some households, Todd, I think we also mentioned consumer goods, fuel, groceries. Those have all increased, and in some cases they've increased significantly more than $100 a month. So we're feeling pain kind of all across the spectrum. It's not just the cost of borrowing, and the reason that they're increasing this cost of borrowing is to get the cost of consumer goods back under control. The Bank of Canada is trying to send a clear message to Canadians: stop spending, start saving your money. And that will then bring some of these supply chain issues back into, a more reasonable situation. And we are going to see more increases, Todd, over the next 12 to 18 months. Mm-hmm. But the rates are not going to the moon. This is not the 1970s, 1980s. We're going to see some increases. Economists think that the prime rate is going to get to somewhere around 5%. And then by the end of kind of next year, we're going to start seeing some softening in the rates, and we're going to get maybe back into a more normal situation. But, with a recession comes other challenges around employment and all these things. So, I think, now is certainly a great time to look at your finances, and I think that every consumer really needs to look in the mirror. Nova Scotians, specifically in Halifax, if you owned a home pre-pandemic, you have a lot of equity in your home. It could be a great time to look at potentially refinancing to improve your situation, to make sure your financial household is in order kind of going forward, because we're going to continue seeing consumer goods maybe become more expensive before, inflation starts coming back in line.
Always great, Clinton. Thank you so much. Talk soon.
Thanks for having me, Todd. Have a good day.
You as well. Take care. Clinton Wilkins, our mortgage guru.